All right, all right, all right. We are recording. We are live. I'm gonna mute everybody. Um, and yeah. So if you have a question or anything, type it in chat, please. I will see that on my other monitor. Okay. So today I wanted to talk a little bit about the timing and the timing for these evening entries and kind of a few things that I look for. I encourage everybody to go back and do their own homework on this stuff just because I always talk about how I feel like the market and trading is a very intimate thing. So it's like between you and the market. So I encourage everyone to kind of go, back test it, live test it with demo, things like that to kind of get your comfort set up. And yeah, I'm just reading right now on Coach's Market Recap. Somebody talking about how they got how somebody was like charging money or taking money to like flip people's accounts or something, and didn't uh, didn't work out so well. I highly recommend that you guys do not get people to try to trade for you, especially not people you meet on Telegram. There's a lot of people posting, floating profits that look real big. There's a lot of people posting before and afters and stuff like that, and nothing against people who do that. However, just because somebody posted on Telegram don't make it true. And I mean, I see some of these where people are posting like highly over leveraged stuff, and I'll tell you right now, I have yet to meet anyone who over leverages, uh, who over leverages to a large degree and over leverages consistently and has actually grown their account to six figures. So if you have, dude, like show me that history. I'd love to kind of see it and pick your brain on what kind of trades you're getting into. But most of the people that I know who over leverage consistently, it's a lot of ups and downs. That is a whole nother webinar series that I will get into because I'm big on risk management. I'm big on account management. People may not like this real talk, but the dude who just got scammed out of 600, moron. Why give you? Hey, I'm just saying. Sometimes you're led to believe certain things, and you do that. I mean, like I've actually gotten quite a few offers or requests from people for me to trade for them, and it's usually the same type of thing. It's somebody who wants, who wants to learn and whatnot, but at the same time they want to earn more than, maybe they've tried out the swipe trades with IMO, or they've tried out someone's signals and stuff, but they're not earning at a consistent pace. So, while they learn and get their groove, they want somebody to trade for them where they see bigger profits. Personally, you can ask anybody who's ever asked me. I don't do that for people. I don't offer that. I don't. It's just not something. And I tell people, be very, very careful if you're going to seriously look for that. But some people, they want somebody who's quote unquote proven to, get them some decent returns while they learn it. And I'm not gonna shoot anybody down for wanting that, but I will just say, like, get some damn good proof if you're gonna actually give somebody money to do that for you. All right. So those of you who have been on like Ozark, oh yeah, no, 100% they can lose some money the same. Yeah, no, I agree. I agree, Praetorian at hotmail.com. You're just asking to get spammed, bro. I hope that's a fake email. I'm just kidding. All right. So, yeah, those of you who know me at all kind of know. I'll see if I can figure it out, man. If I can figure out how to change it, I'll let you know. I haven't really messed with my Zoom info, I don't think. So, okay, yeah. So for those of you who know me, I like to get in the evening. I like to get in on like an Asia session entry. And I'll show you a couple of things that I look for. I've found personally, we'll go back and I'll kind of show you a couple of other times where we see things tend to tend to move. This New York Open is one of them, and then also we often, not today. Today we didn't, but you can see right here, like right before New York Open, change direction, goes back down. Yeah, you'll see that quite a bit. Quite a bit. When there are when major markets open and close, gold moves quite a bit. In general, I mean, it's just kind of a common thing. It's not as consistent though, but I've found this evening to be a very consistent earner. Being able to get in low risk and high potential reward. And that's actually one of the things kind of that I want to make sort of a focus for today is the type of trades that I look for. You guys may see me post sometimes where I talk about how I go for 50 pip on my gold moves. That is true, and I'll kind of show you why that is, and I'll show you guys the R&R, the RR, the risk to reward, behind the trades that I do and why I go for what I do. And you guys think you'll probably enjoy that. Those of you who haven't seen or heard me talk about that in specific detail. Let me just see. We got quite a few people. Let me just see who's on. Where's my managed participants? There we go. Hey, I see you, Sean. All right. Yes, it is being recorded. It is being recorded. So, and I'll post the recording. I'll post it on my, oh, whoop, I just did something. I lost my man. Oh, okay, here we go. Yeah, it's being recorded and I'll post it on my channel, and I will also, Nessa, you got your video off, right? Good. I will, I'll post it. I'll post the recording in like the market recap channel and Ozark as well. All right. Okay. So this timing here, I've talked about now. I'm in Dallas, so I go on Central Standard Time, is what I go off of. And you can see here, I drew a little orange line here. I guess we can kind of make it slightly thicker. So basically what I've noticed, what I started noticing with gold, I went back and, I was in the gold rush trades and stuff like that, but I was always like, what's this 1-to-1 risk to reward? Because it was almost always just standard 1-to-1, 50 pip stop loss, 50 pip TP. But it was a breakout strat, and breakout strats, for those of you who know, are, if you have the strategy down, a proper breakout strat is usually going to be pretty accurate. But the risk reward, I didn't really dig that. So I started kind of reverse engineering. And what I was seeing was like on a lot of these breakouts, I was looking and I was like, okay, so if we're getting in right here, how come I can't find this? Like, how can I find this entry right here? And that's kind of what sparked me to just like focus on gold, was that he was always calling 50 pip TP1s. And a lot of times that was what was getting hit. And so I was like, all right, if it can go 50 pip from the breakout, it's got to be a way to get it, and I was seeing that it was often like 30 to 40 pip higher, sometimes 50 pip higher was where the swing high would be, or the swing low if it was a breakout to the top side. So I went back and started looking, and I was like, he was always calling them at night. So I started there and just went back. And what I saw was this big, very consistent pattern of price making a move in the evening that started to go across this zone, and then would end up breaking out. And what I was finding was that his breakouts were often like the days trading, or the Asian session. It sort of depends on. Usually, one or the other is the high or low for the day. From including the London, New York overlap and everything. But I was just noticing that price would often kind of set this zone, and this zone was often between like 20 and 40 pips or so. And what price would do is I would see price kind of pushing one direction on that 7 o'clock candle, and then it would often turn around and go the other way and then lead, come back down and then break out the other side of the zone. And that's where he would be making the calls. And when I started looking at it, I was seeing that price would move usually at least 50 pip from one swing high to the other, so from one swing high to swing low, even on days when trades weren't being called. And so I was like, all right, we got a pattern here that could definitely be exploited. So that's what I started doing. And I encourage you, any of you who haven't, or who haven't been on any of the Zooms that I've kind of gone back and done this, to go ahead and just go back and look at the timing. And you will see, you'll see some, here's 7 o'clock candle, right? 8 o'clock, nice move into the evening, into the night. Then you see London, price turned around. Then you see New York open right before New York open. Price pushes back down. Then New York went the other way. We'll go back. Here's 7 o'clock candle, 8 o'clock candle. Forms a little tweezer top. The 9 o'clock candle, we get a retest, and then boom, we're gone. Let's see. Over here as well, here's the 8 o'clock candle. This one took a little bit longer, but you see what happened? 50 pip. At least 50 pip is typical, right? So I started seeing that, these moves from one of these to the other, these swing highs and swing low, kind of the minimum of like a legitimate one. You see some of this little up and down here. These, I don't really consider these to be swing highs, swing lows. So that's not part of the swing. You go from here to here to here to here, here, right? Here. So what I was noticing was that these moves here were typically, you see this one, 1248, 1252, right? So that's a 40 pip right there. I mean, even on this one candle alone, we had like 45 pips. But I was just seeing that those moves were very regular and multiple times a day. And then a lot of times what it would also do is you see a lot of this down and back up. This is over the course of a day. This was the 7 o'clock candle right here, 8 o'clock all the way down. And then it turned around, came back up, right? Did some more of this. We see push down here. What time is it? 7 o'clock candle, 8 o'clock candle, gone. Back up, right? You guys seeing this pattern? Type 1, if you see what I'm talking about, if you understand what I'm talking about. You get it? All right. All right. So you see why this would be kind of a profitable time of day to take a look at, to pay attention to. We see right here, 7 o'clock candle, and then we see 8 o'clock, right? So if we get in the trade off the 8 o'clock, and basically what I did, these, for those people who know me, you know that I like to use forks to create channel lines, parallels of trend lines and whatnot. And you see, like, I just clone these. Literally, I've been cloning. Anyone who's been on any of my Zooms recently, they know that I clone these over from, like, I mean, look at way back over here, the same exact angle. And I actually brought this from before as well. So you guys know I'm just cloning these out and just copying them over. And sometimes I might shift them one way or the other, but I mean, it's kind of funny because I drew this one. Look right here, like a major channel line. I mean, and a lot of these is like, it could be news, quote unquote, that force this down. But where did it stop? It stops like right on a channel line, and it's anyway. You'll. I like the forks. You don't have to use the forks to use this this entry technique that I'm talking about, getting in the evening. But I find the forks to be, to be quite handy. How do I find the angle for the fork? Good question. Good question. I did this a while back, but I usually go to the 1 hour chart and I find an angle that has been both wicked to from the top as well as wicked to from the bottom. And that's kind of where I start. I look for angles like that. I just, I look for something like this to jump out at me. Okay, so we got a wick. This isn't, necessarily the cleanest, but you do see we've got, some love here. Got a nice clean wick there. We got these hitting here, and probably if I extend this out, you guys can probably see it's going to hit over in this area. and probably would continue up into like this zone here. Right, so if we just keep these same 2 touches right there, we can kind of see where this goes. Kind of see what I'm doing there. And you could, if you wanted to, just like, you could clone this out and keep it going and just see where it goes. But that's how I find my angles to start with. I look like that, get the top, get the bottom, and then I'll take, what I'll do is I'll like take that line and I'll kind of test it out in some other zone. Is this being respected? Is this particular angle being respected? And there's an interesting thing that you see sometimes. I did on another one of my zooms, where, let me see, template here. So I've got a little MA template. It's kind of an interesting thing that you see here, and that is like look at this downtrend right here. And of course, like I told you, this angle came from way back, and it's just been cloned out. But you see when we make a big move and then price kind of consolidates, these MAs tend to kind of flow. Look at this. Like, so people who trade MAs, I know Sean, you're big on MAs, right? So this is where a lot of different types of traders, you can end up in the same trades. This is a 200 EMA, this purple line here. And you can kind of see how it moves along the same or a similar angle when you get these breakouts. And so there's some relevance there to the angle that you see when you turn on things like the MAs. If you're not already a forks believer, or a fan of the forks, like I said, you don't necessarily have to use them. I just personally, I find like they give me more insight into what's going on. So right now, here we are at 6:35, and we can see this is the 3 p.m. candle. There's no 4 CST. There's no 4 p.m. to 5 p.m. candle because gold is not moving at that time. The market is closed for that 1 hour. And so if you look at the 4-hour candle, what you're going to see is you're going to see the wick here. And the 4-hour candle, this 4-hour candle closes at 8 p.m. Central Standard Time. I would like an easy to follow video on forks for those. All right. Yeah, no, I'm going to, now that I've got, we're set up, we got the new apartment, we got the internet going, I'm going to do like a boot camp on kind of how I do the forks and everything, just kind of set it up from zero to show you how I find the angle, and then what kind of settings I like to use, about how wide I like to have a channel and things like that. So I will do a video series on that, but yeah. So what we see here, yeah, so what I was saying, the 4 o'clock candle, this 4 o'clock candle would actually be this one candle, and the next candle. And if you looked at that 4 o'clock candle that closes at 8 p.m., those are the only 3 that are part of it. So you would actually get a slightly different line here. I like to add in the 3 p.m. to 4 p.m. pre-New York close candle as well. That's just me. I don't know, maybe if someone else looks at it and backtests it and checks it out and stuff, you might find that maybe not adding that is better. However, that's how I do it. Fork is a bit cleaner for trends instead of just drawing trend lines. Yeah, I just find it gives me added, like I said, added insight. It gives me additional insight. Sometimes if you're only looking horizontally, things like this and things like this, they don't really tell you a whole lot. Why did price stop in this area? Why did price stop in this area? Of course, if you have your MAs on, you might see MAs bouncing there. But I find that the forks is just, at a glance, it gives me a lot of really good information, gives me more insight. I don't have to, I mean, until this angle stops having any relevance, I'm going to keep using this angle. I might, sometimes when I have time, I haven't, but I may, when I have time, kind of play and find, look around, see if there are any other angles to find. But you can see how even weeks after I made this angle, you see that if we drew a line from this wick and this wick, I mean, it's not exact, but you can see how wicks down on the 1 hour are still respecting, wicks up are still respecting. And, so you can see that this angle still does have some relevance. Now, what I like to do is I like to mark off that 3 p.m. A lot of times you see a shift in the market after New York closes, not always, but I like to mark off the top and bottom. So this was the 5 p.m. candle, it pushed up here, and then you see 6 o'clock, we're sitting here in the middle. What I like to see is, I like to see the 6 o'clock candle and the 7 o'clock candle, where that goes. Again, this is Central Standard Time. If this 7 o'clock candle pushes up and sets a new outer, boundary for this line here, then I would just adjust this line and, and move it as it goes. What you'll sometimes see is the 6 o'clock candle will come up here and kind of test the same type of area that the 5 o'clock candle tested. And this is just something I encourage you to back test. I've been kind of playing around with this myself recently, seeing if I could catch, because I saw a lot of times the 7 o'clock, these candles will kind of move across this 20, 30, 40 pip zone. And I was kind of like, maybe I could start getting that movement as well. Because if you catch that and get some decent profit, then you're basically, your evening entry is on the house. You're just, risking a little bit of the profit that you got, is kind of how I look at it. But we see right now, so sometimes the 7 o'clock candle will push across to the other side. The most basic methodology here, yes, you do need a back test. The most basic principle here is that whatever direction price is moving on the 7 o'clock candle, and often the couple before it. So personally, I think price is going to be more likely to continue moving in this upward direction through the 7 o'clock candle. It's just my, it's just my thought. It's not a prediction, but I think it's more likely to do that. If it is, I would be looking to go against that direction. Typically, I want to go the opposite direction from the pre-Tokyo movement. And that's the strategy at its most basic form, is you just go against, go the opposite way, essentially. Now, what we sometimes see happen is here let me go back to, so right here, this was the 3 o'clock candle, the 5 o'clock candle set us a zone right here. 6 o'clock pushed to the other side, made us a new high. So this was our zone at 6 p.m. Really? All right. This was our zone. And then what we saw was this 7 o'clock candle just pushed out of it and created a new zone. But the 8 o'clock candle continued in that same direction. So this is actually a situation where I got into a trade. This was yesterday. I got into a trade over here because I saw this morning move really strong. And what you see sometimes, as I showed you, another time when price sometimes likes to turn around and go the other way is that when New York, London overlap finishes, that 11 o'clock-ish, 10 o'clock, 11, 12, and then sometimes goes the other way, especially if you've had a good strong morning move. So because of that, I got into a sell up here, and then it just played in that same zone forever. But this 6 o'clock candle pushed up to the top, so I jumped in here because it barely missed. I was on like a 8.2 pip stop loss, and it barely missed it right here when it peaked out. And so as soon as it came off of that, I went and jumped in for 2% more on a 3 pip stop loss. I used the same stop loss as I had on this trade. And then it ended up, going the right way. But if you see here, so 7 o'clock going the right way for that trade, but I was trying to catch that cross the zone movement and I was then looking for a buy later in the evening. And what you see here, that was stupid, man, because I risked a total of 7% and got 60% return. I got 17 to 1 on that 2% risk right here because I got out at 52 pip. And then I closed this one at 50 pip, and I closed like 20% when it was at 25 pip just to lock in some profit, and then closed the other 80% when it hit 50 pip. And I think I averaged like 5.6 to 1 risk on that one and 17 to 1 on this guy. And yeah, it was ridiculous. But that's what I want to talk about today as well. So like the general timing strat, what I'll just go into that a little bit more here, but 7 o'clock, we see the candle, or 6 o'clock, then we see the 7 o'clock candle pushing in this direction. So that as 6 o'clock ended, 7 o'clock continued in that same direction, set a new lower boundary. Then 8 o'clock just, you see here, no wick. It just kept going in the same way. So what I was looking for was this 8 o'clock candle to bounce somewhere significant. It bounced right on the channel line. It also bounced here. In this is a zone that I had drawn out previously on the 4-hour chart. All three of these were prior to all of this movement. I just extended them out to the right, which if you don't know how to do that in TradingView, it's super simple. You just double click your coordinates. You can come over here to this bar and just type like 999 or something high. Put a 0 right here. It'll just spit them out both ways. Because what you're doing there is effectively putting the bottom left-hand corner at 0, top right-hand corner at 999, or vice versa, depending on which way you happen to draw the rectangle. But where was I? So right here, when we see the 8 o'clock candle continue pushing in the same direction as the 7 o'clock, I'm not looking to get into that trade until it's gone down and bounced somewhere. And then oftentimes, now this was like a pretty clean bounce. There was a lot of confluence here. This was a very clean bounce. It might even, if we turn back our MAs, no, I don't see anything MA-wise. I don't usually keep those on, but I thought maybe we'd see something there. The pip, count the pip. Okay, yeah. Counting the pip. So for all intents and purposes, 1 pip in gold is the digit to the right of the decimal. So 50 pip would be like from 1250 to 1255 would be a 50 pip move. Just throw off that last number. When you trade gold, you're trading 100 ounces of gold. That's one standard lot, and that's why you get a slightly different pip count. But if you're trying to count as in one standard lot is $1 per pip, that's how you should think of the pips. Is the number to the left is tens, the number to the right is the ones. So where were we? I need to turn these guys off again. 8. For real. Okay. So we're over here. We saw the 8 o'clock candle still pushing in the same direction, so we're waiting to go the other way. Now, what often happens when you get that type of scenario, it doesn't often push quite, this far, 30 pip or whatever, 40 pip outside of the zone, but that does happen from time to time. It happened over here on this one right here. 7 o'clock was set the new zone, and then 8 this is the inverse of that. 8 just took off, and then we just saw a price continue in that direction. But in this type of situation, I'm basically either selling a retest of the zone or waiting down here for a buy. And that kind of depends on how many pips we've already traveled. In this case, we had already gone almost 40 pips. And so I wasn't really trying to get into a sell here just in case it only went another 10 or 20. That's just, I don't know. I've spent a lot of time with gold, so I kind of have certain ways that I feel about how far price has gone or prior to getting into trades. And that often will dictate whether I get in or not only support resistance and things like that. And if there are so many moves, you can see this, there are so many 50 pip moves on gold in a week that so you miss 30 pips here. It does not matter. Like, got to get that FOMO out of here. There's no place for fear of missing out in trading. All it does is get you in trouble. So right now we're looking at price. The 6 o'clock candle is like dead in the middle of the zone. So I kind of want to see what the 7 o'clock candle does. I could definitely see a world where the 7 o'clock candle comes up here and like respects a line somewhere like this. If that's the case, and then the 8 o'clock kind of pushes outside of this box and then starts coming back, I might be either in on the return into the line, or I might just wait and see where the 8 o'clock candle closes, because more often than not in that type of scenario, the 9 o'clock candle comes back up to retest. And like I said, there's no need to chase. So if it, oh, wife came in to grab the toolbox. Um, yeah, I mean, like if you miss something, you miss it. Like, don't. Personally, here's the thing. What I'm going to get into starting now is the risk to reward on these trades and why I do what I do. So I try to get the trades, as you can see, kind of at trying to catch them on swing highs and swing lows. And I know some of you who are on this have kind of like wick entry methods and things like that that you use. I encourage you to, if you're not already, start looking at this type of timing, start looking at the patterns as far as timing wise that gold has, and use those methods. Because if you can get nice little entries on the swing lows or swing highs, you get in some incredible risk to reward. I usually get in on a 10 pip or less stop loss. I typically, this channel is a little bit wider than I normally draw them, and this is because I drew a big one way back when. This is 120 pips, which means from here to here is 60 pips. So sometimes what I will do in that situation, if I kind of want to have a little bit more of a look, is I would make another fork inside of this one, kind of just match up the lines, and then that way the full channel from here as far as the forks go does it work on every pair? I don't know about the timing. I know forks, personally, I find that they give me better insight onto every pair that I use them on. That's just me. The timing wise, I think you'd have to look at other pairs. Other pairs are probably going to have different, different timing that they move around. But yeah, sometimes I'll draw another channel in there like that just to kind of get a little bit more insight as far as not having so much width between the lines. But when price is playing off of I'm just going to remove this for right now, off of one of my lines, and I've seen it move. One of the other things that I look for real quick. So if we see price pushing up here, I generally, before I jump into a trade, I want to see it go at least 50 pip from the previous swing high or swing low. And that's just because gold, for the most part, if it doesn't go 50 pip, then, I often just stay out of it. It's often, you see, this was 50 pip. From here to here was not quite 50 pip. It was like, 45. But if it's only moved 20 or 30 pip from this swing low or swing high, I don't want to get involved yet, because I just feel like it typically moves more than that before it bounces around. Looking at the 7 to 9 work for most pairs. I have not tried it on other pairs. I have not looked at other pairs, just because I spend 99% of my time on the charts on gold only, and I don't spend a whole bunch of time every day on gold or on the charts. Especially this past week, I didn't trade at all until yesterday. Just kind of on a whim in the afternoon when I got into that trade up there. So yeah, I don't know. You have to look at it for yourself on other pairs. Gold has a lot less liquidity. Some people don't realize that about gold, but when you think about it, I've said this before, you don't get off the airplane when you fly to Amsterdam, get off the airplane and take a brick of gold to the window and say, hey, I need some euros, right? So there's a lot less non-trading, non-commodity like production and holding related liquidity in gold. So gold is a lot less liquid than other FX pairs, which might be one reason why market close and open. Like if you think about it, all the transactions that have taken place, all the people buying or selling gold that's been produced and all that. If you're in a particular country, that's probably not going to go out until like the end of the day, right? So it kind of, to me, makes sense that we would see bigger movements towards the end and beginning of days. With gold even more than we would with other pairs, perhaps. All right, so 50 pip. I want to see it move 50 pip from place to place. Current move. Oh, like right now, as far as a retest of this zone here. Is that what you mean? This one right here? Or do you mean like, yeah, right now, yeah, it looks like we might kind of head up and retest this zone here. And if this candle does come up, I mean, we only have 8 minutes left on the candle, so we'll see. I feel like probably the 7 p.m. candle is going to push up higher. And then basically one thing that I would be looking for would be like, I would rather see price kind of come up to like, 7 p.m. It may not come all the way up, but I would rather see a sell from like this 1246 area, somewhere up in here, maybe like around 9 o'clock or whatever, I would feel more comfortable getting into that sell, especially because you look back and you see that we have also, that's a place that has been support. So I'd love to see like the 7 o'clock candle kind of push up, maybe the 8 o'clock candle continue up, and then get into a sell over here. I did not get into any buys on this side of the zone, which maybe that's something I'm really trying to get more into, is seeing where this candle is and then like buying away from it, or selling away from it. Kind of want to back test that some more. Why did I do that? Okay. So if you look back and you see all of these moves, I think you can agree that 50 pip is not a whole lot. 40 to 50 pip is not a whole lot in gold, right? From swing high to swing low. So that's why I tend to go for 50 pip. And what I do when I enter is, if I'm looking at price action and it looks like, we've come up into this area and then we hit here, we push up and then, start to come back down, maybe 9 o'clock, another retest up in this area, then come back down. You see candlestick formations, you see, double top, whatever. You see other confirmations that lead you to believe that it could be exhausting here. That gives you the ability to jump in, especially when we have things like channel lines as well to give us more insight. If it bounces cleanly off a channel line up in here and then starts going away, I'll jump in pretty quickly. I'll usually set my stop loss to be about 5 pip or so off of the channel that it's playing off of, and then I usually try to be in within 2 to 3 pip of that channel line. So that usually gets me 7 to 8 pip stop losses on these trades. And what that does, let me just come over here and I'm going to share the whiteboard right quick. So move that over there, move this over here. All right. So let me just talk really quickly about the risk to reward here on these trades. The pattern is pretty consistent, and if you go back and back test it, you're going to see it. I love it. I talk about risk reward and like people start dropping off the call. All right. You'll see a pattern of movement here. Yeah, I always enter market execution on my gold trades. Almost always. Every now and then I'll set a buy limit or sell limit, but I often like adjust those if with on MT4 anyway. Yeah, you see it now, right? Good. I switched over to whiteboard because I'm just going to show you. I'm going to show you. Yeah. All right. So typically it's under 10 pip stop loss. Okay. And if you haven't watched on my edutainers channel, if you haven't watched my most recent video, it talks about the value of a pip through the course of a trade. I encourage you to watch that, because you'll kind of understand some things about your profits versus the number of pips that you're catching, especially if you're someone who takes profit along the way. I see a lot of like signals go out and they'll be like TP1 hit, move your stop loss to break even, and then maybe TP2 gets hit, maybe it doesn't, and then it'll be like, oh, we got knocked out at break even, but TP1 was hit, and so when they count their pips, they put the pip number that they got at TP1, right? But if you took, let's just say, for example, 50% of profit out at TP1, that means half your money went back to break even. Half your money got knocked out with zero profit. So you didn't actually get, if the TP1 was 50 pips, you didn't get 50 pips. You didn't actually, yes, you caught 50 pips of motion, but personally, I don't care about pips. I don't care about how many pips I can catch, just a movement. I want to know how many full value pips I caught. And I always calculate based on that. So if I take any profit out, yeah, Sean, if I take profit out along the way, I factor that into the number of pips. So like if I take profit out on these gold trades, I won't say the 50 pip TP was hit, but I don't consider that earning 50 pips, because I only consider the earnings based on what I was risking per pip. If I was risking $1 per pip, then, and I only made $35 on the trade, then I only made 35 full value pips, even if the trade went 70 pips, but because of the way that I took profits out. Now, if you don't really understand what I'm talking about here, why would 50 pips of movement only give you $35 or whatever? Go watch my previous Zoom. That's what I talk about, the whole Zoom. Well, I probably snuck some gold in there because I think that was, again, like a 6 or 7 o'clock Zoom. But what's up, John Jay? I'm waiting. All right. Well, I'll keep going. So I usually go with under 10 pip stop loss. I'm typically 7 to 8 pips, but we'll just calculate it at 10. Oh, yeah. You saw this Zoom? Cool. Appreciate it. Yeah, I definitely encourage you guys, if you don't think about pips that way, go look. Yeah, broker spread. The thing about broker spread is you pay, or you pay the broker spread when you enter the trade, essentially, because if this is the bid price and this is the ask price here, and you're on a sell, then what they give you is they give you that higher price. So this is where you actually enter, even though you would see this price on MT4. This is where they give you your entry. And so you have to travel this distance just to break even, just to become blue. So that traveling that distance, that's you paying the spread. So when you calculate your break even, you don't have to put your break even like 3 pips below that to account for the spread, because you already traveled. If you're in profit, if you've moved all the way down here, Sean, dude, yeah, anyone who rags you for saying that, in my opinion, they're not a professional trader. Like, I don't care who they are, how much money they say they made. That's just like bottom line. If you think of your pips like that, you're not a professional trader. You don't do this for a living. There's no way around that. All right. So if you came all the way down here, that means you already cleared your spread, which means you can go ahead and put your stop loss at break even here. You're not going to lose money on that. You already lost money because you started here and had to get here just to make anything. Now, what you do want to do is watch for your commission. If you pay $2 per standard, then you want to put 0.2 pip underneath if you want to legitimately like just break totally even. I personally like to put it like 1 pip, maybe 2 pip or whatever, but it also depends on how far price has traveled. If we've only gone like 7 or 8 pips, I'm not going to go put my stop loss at 1 or 2 pips below my entry. Not yet anyway. Okay, so get this masterful drawing out of there. 10 pip stop loss. I go for 50 pips per trade. And if you notice, that's 5 to 1. And these entries, if you just go back and look, these entries price moves from wherever it is around, between the hours of 6 p.m. and 8 p.m. Price moves from there another 50 pip pretty much every day, every week, every month. I've been doing this since I started like studying gold. I think it was like in March. I think it was April that I've been doing this type of trading, which I typically chart on the 1 hour. I draw my lines on the 1 hour. I sometimes I drop down to the 15-minute, clean up the lines so that the wicks match on the 15-minute. And then I might draw my forks on the 15-minute. But I'm often looking at the 1 hour, especially for this evening entry, because I like to see where the 1 hour candles open and close. Now, if for example, if we break this zone here on this, like on the 8 o'clock candle, if we broke out of here, I might drop that down to the 5 or 15-minute and see if we retest it, how the retests are looking or something like that. But typically I would even wait and see, I would want to see the 1 hour candle close either above or below this line. If it closed below it, I might look for a retest on the 15-minute and then jump in for a sell because it broke out of this zone that direction. However, for the most part, whichever direction it went, I'll go the other way, because what you often end up seeing is the 8 o'clock will push out and then come back in, and it actually closes inside of here. Then the 9 o'clock might push back out, form a tweezer top, come back in, and then you're gone. Every now and then the 8 o'clock pushes out and then you're gone. But if that happens and you quote unquote miss a trade, just get back in tomorrow. Like anyway. And you'll see with these numbers, it's stupid. It's ridiculous how profitable this can be. Because these numbers here are not unrealistic. Getting in with a 10 pip stop loss, when you've got your zones like this and you've back tested this, it's not it's not unrealistic. It's not that often that I get knocked out of a trade and then it ends up still going in my way. Not until later. Now, with it's gold, so eventually, yeah, you can get into a sell. Eventually, it's going to become a sell. Get into a buy. Eventually, it's going to become a buy, but that might not be relevant to the trade. Like if you get knocked out down here and then it goes all the way down here before it turns into a buy, like did that really go your way? Like no, you would have had to have a 150 pip stop loss. Oh, my bad. I'm sorry. All right, I'll go back over here. What I was talking about was, sorry, yeah, getting in. Thank you. You guys got to hurry up and tell me. So, yeah, I was just saying, like, these 10 pip stop losses, if I see price push out below this zone and then what often happens with that 8 o'clock is it's going to come back in. And then if it does, all right, no problem. If it does, it'll then often retest that same kind of area, form a tweezer top, and then you'll see it go the other way on that 9 o'clock. And it's just I'll answer that in a second. So if it knocks me out at my 10 pip stop loss, it's not that often that it knocks me out there and then from there like turns back around or just goes another 3 or 4 pip and then turns back around. It really isn't. It usually goes like at least another 20 or 30 pip before turning around. And the way that I look at it is if I'm in on a 10 pip stop loss here and it goes 20 or 30 pip and then I feel like I have a valid reason to re-enter there, that I'm going to make better money if I do it that way. All right. Now we're going to go back over. I'm going to go back over to the whiteboard. And while you're trading your live account on the 1 hour, do you demo, create more structures on other charts, just run errands? How you manage your time? I'll be honest with you. I've just gotten to these trades on gold so often now that I don't care. Like, I don't care if I lose. It really doesn't matter. And I'm about to show you why. Trust me, this right here, what I'm about to show you right now, this will like help you with your emotions trading this particular style of trading. Is you see this 5-to-1 right here? That's the number of pips we're going for. Now, if you take profit along the way, you're not actually going to end up getting 5-to-1. You'll get more like 4-to-1, or depending on how much profit you trade. Me personally, because I just see how gold will often go travel 50 pips and have hit that 50 pip TP so many times that I just genuinely do not care that much about devaluing my pips. What I mean by that is I don't want to take too much profit out along the way. What I will often do, because we know that price tends to do something like this, even when it's going to go, we see that type of thing a lot. What I like to do is I like to see this be a minimum. I like to see this be 10 to 15 pips away from my entry. At that point, I'll move my stop loss to entry. Sometimes I will take 10% out of the trade at 10 to 15 pips. It usually ends up being more like 12 or 13. I don't do this every time. Haven't been doing it as much recently, but I would take 10%. I would close 10% of my position at 10 to 15 pips of profit. And then I would close another 10 to 20% of the original, and I'll get into the numbers here, at 20 to 25 pips. I will get into the numbers here in a second. And then the rest is that 50 pip TP. Now, sometimes if it's like just blasting down towards my 50 pip TP, I might drag it down out of the way or reset it on my phone or whatever to avoid, to maximize on that. But if it's just kind of pushing in that area, I'll often just go ahead and take this. And if it goes 10, 20, 30, 40 pips more, do I care? Because, when you get that, like you really don't care about losing out, quote unquote, on a few extra pips. So 10 to 15 pips. Now, if it goes to 10 to 15 pips and then just comes right back up towards my entry, I usually, even if I took some profit out there, I usually don't move my entry here. And that's just because you see a lot of times you get it stopped out in this type of situation, you might get stopped out right here, it's just pretty rare in me doing it. Maybe I'm not very good at re-entering after getting stomped out, but I almost never get a better entry. I used to do this more often. I almost never got better entries. I ended up like re-entering here or here or here. At that point, I'll trust my stop loss. If I'm going to lose the trade, I'm going to lose the trade. And again, we're about to get into why I care so little about losing a trade. And this is one of those reasons why sometimes people come up and be like, "Yo, the RSI is pointed this direction. Like, be careful." And I'm just like, I do not care. This is why, because and anyone who's seen the RR on this, they know what's coming. So here we would have like 70 to 80% gets a full 50 pips. Now, let's just say that we are in for one mini. 0.10. That is $1 per pip, right? That's $1 per pip that we're risking. You know what? We don't like red, we go blue. We are risking $1 per pip. I'll get to your question in just a second, Mercy. I think I kind of just talked about that though. When you get stopped out, do you look to re-enter the same trade on a better price? Yeah. If you can get a better price, you might look, but I find that often once it's gone to this point, if it comes back and knocks me out here, it might be going back the other way. So it's just it adds to the risk to then get back in. Now, again, like if you were down and moved 7-8 pips and then came back and you had moved your stop loss here and it knocked you out there, yeah, then in that type of situation, I would consider the trade still valid and you can try to play around and get a better one. But with the spread being typically, for me on FinPro, it's usually like 1.23 pip. So you're already, you're going to lose that off the top. So why pay that twice, etc. Now, going back here, so we've got one mini, we've got $1 per pip, right? Now, I classify my trades into 3 categories. They either win, it's either, I'll move that. The trade is either going to be, you don't need that anymore, right, guys? If you need me to like talk again about something that I already talked about, just let me know. My trades end one of 3 ways. Winner. A winner means it hit the 50 pip TP. TP smashed. Inside joke. All right. Number 2, I consider a loser to be any trade that does not hit the 50 pip TP. However, it reversed after I moved my stop loss to entry. So this is like a break even. We actually profit a little bit. Got a bull in your league. All right, man. Just check out the recording if you want to see this part. Number 3, whatever you want to call these. I think when I first talked to somebody about this, I just called this a bomb. This is the trade that you get in for a buy right here and it goes like 4 pip and then just boom, like you're out, you're done. Super choppy. Yeah, you know what's up. Oh dear. I love super choppy gold markets, man. I love those weeks when there are no quote unquote breakout trades, dude. Hundreds of pips. So bomb is I lose. Now I personally, here's what I do. I do 5%. Per trade, per gold trade that I get into, I do 5%. And so when we look at this, when we look at what happens here, so we have the 10 pip stop loss. Cool. All right. Thanks for checking out, Chelsea. Yeah, definitely watch the recording because you'll want to see the rest of this. It'll blow your mind. All right. So on a bomb, we lose 5%. What happens on a winner? If we are in for a mini, and my lot sizes depends on which account I'm trading. I mean, I trade multiple accounts. I copy trade, and the lot sizes are different. The percentage stays the same. Except on my main account. My main account dollar figures are higher, so I scale back my risk as my main account has grown. I think that's smart. The smart way to manage your account personally. If you have 150K in your account, I don't see the reason to risk 5% of that per trade. I risk right now 0.2 to 0.5% per trade on my main account. And I still make more money than the 5% risk that I risk on my side accounts. But that is beside the point. So up here, and that's not because I'm some like fantastic, amazing trader. That's because I manage my account well. So when you say 1 pip is at 0.1 or 0.01, Pip Ninja's definition, if you weren't here earlier, is a 0.1 on gold is what I consider 1 pip. So from 1300 to 1305 is a 50 pip move. Because the reason why I count it that way is because I count whatever gives me $1 per pip, whatever whatever movement gives me $1 per pip on a 0.1 lot size, or $10 per pip on a standard. That's what I consider 1 pip, just because that's how pretty much every other pair is calculated, and to me it makes more sense to think of it in those terms. I know, Sean, you think of it a little bit differently, and Hector, we have our history behind that. But yeah, so here we go. So 10 to 15 pips, meaning if we got in at 1300 and we were on a buy, 1301 to 1301.5, somewhere in there I would have taken out 10%, which means I would have closed 0.01. And just for simplicity's sake, we're going to do this number each time. So instead of saying 12 or 13, which is often around where I actually end up taking the profit, we're going to say 10. So I closed 10% of a 0.1 position. So I closed 0.01 at 10 pips. What that's going to do, first of all, 5%. If I'm in for this on a 10 pip stop loss, I'm risking $10, which means I would have a $200 account. Right? So if I had a $200 account, I would get in for a 0.1 with a 10 pip stop loss, risking $10 per trade, which is 5% of my $200 equity. 10 pip stop loss, $10, risking $1 per pip. Now I close 0.01 at 10%. What that means is I just locked in $1 of profit, and I moved my stop loss to entry around this area. So now if price comes back up and knocks me out, I consider that to be a loser. I didn't actually break even. I earned $1, which is 0.5% of my account profit, minus the commission, which in this case for me on FinPro would be 0.02. If anybody has a broker that they're not very satisfied with and they like FinPro, I encourage you to check out Sean's FinPro page. He has put together a community there with a lot of really good information, and basically just trying to help people save more money and not pay their broker as much money. And it's an open community, very everyone's got each other's backs, and good and bad, whatever experiences people have, put that there and kind of try to sort of team up on the broker if anything goes wrong. And he's got a nice big umbrella there. So anyway, I encourage you to check that out, and I'll drop the link to that in a minute. But I want to get through this. I use FinPro. I'll drop the link to Sean's channel here in a minute. Okay, now 10 to 20%. So that's a loser. Now, if the trade continued to go in our direction down to and hit 20 pip, and we take out another 10%, that's of the original, not of the remaining. We would take out another 0.01. If you took out 20%, of course, that would be a 0.02. And I guess we'll do the math for each one. So what we would see here, we've now gone 20 pips. So we're now closing $2. Or if we close 0.02, we would have had $4 of profit. Now, if this trade then turns around and goes back the other way and knocks us out at entry, we're done with that trade. We don't necessarily try to be re-entering that unless you just have a strong feeling of what's going on. That knocks us out. And in that case, we would have had in our pocket either $3 if we took 10%, or $5 if we took 10 and 20. If my math is wrong, please someone correct me, but I think it's right. Which means, let's just say that happened and that was one of our losers. You actually profited $5, risked 10, which was 5%. You just gained 2.5% on your account on one trade that was a loser, did not win. I don't think that's bad, in my opinion. Now, what you have left is you have either 0.8 or 0.08 or 0.07 left. So now you're actually not getting $1 per pip anymore. You're only getting either 80 cents per pip, not what I tried to do, or you are getting 70 cents per pip for the remaining pips beyond this point. Now, let's say that this trade continues on and goes all the way and hits our 50 pip TP. What you're going to do, what you're going to see there is you got 30 more pips at either this or this, which means you either made $24. Wait a second. Yeah. Or you made $21 in addition to the $3 or $5 that you already had. So plus in this scenario where you had 80, that's plus 3. And in this scenario, plus 5. Over here, you can see that you would have $26. Is my math wrong? Are we good? Are we correct here? $27. My math is way off here. It's got to be. Timeout. 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 Sorry. We did not get. You guys got to check me on that. Timeout. My math is off here. Forget everything you just saw. Like stricken from the record in court. The jury did not see that. You did not see that piece of evidence that was crucial. You did not see that. All right. Sorry about that. We got 70 or 80 pips, 80% for all 50 pips. My bad. We took this out along the way, but we got, what we're doing is we're closing 0.8 times 50. So we're closing 0.8 times 50 pips or 0.07 times 50 pips. Oh, man, that math. We need to, yes, you need to teach me math, Hector. All right. So over here, let's do this again. We either got $40 or $35 plus the $3 or the $5 that we took along the way equals, on my screen, I got to move this thing out the way, 43 or 40. So you can see that by taking more out at 20 pip, in the long run, on a winner, you're going to earn a little bit less. However, on a loser, you're going to, win a little bit more in spite of the trade losing, not winning. All right. So these are the type of numbers you're going to be looking at, assuming you take some profit at 10 pip and take some profit at 20 pip. I usually end up, like I said, it's usually more like 12 pip or so. And usually if it goes to 20, it's going to go to 25. So I'll often go ahead and do that instead of this, but that's just me. For now, we're going to use these two numbers. So a winner is plus, you netted plus 43 pips or plus 40 pips, right? Because originally we were risking $1 per pip for 10 pips. So the full value pips is either 43 or 40 pips. And the loser is going to typically be, we made either $1 or we made $3 or $5, which means we got either, sorry, let me do this over here. Over here, we made, maybe 1 pip, 3 pip, 5 pip. And on the bomb, minus 10 pip. So when you're risking 5%, here's why I do not care. This is why I trade on these patterns. I don't care what the RSI says. I don't care what the MAs are doing. I don't care what the overall long-term bias is, because for the most part, price is going to move 50 pip or it's not, but it often does, more often than not. But we can do the math right here. Do you guys, I don't know, you would probably not want to screenshot that, but I'll give you like 5 seconds if you're going to. And then we're going to clear this. And what I'm going to do, so we saw that a winner, goodness, my brain. A winner is, you're going to get 40 to 43 pips. A loser, you're going to get 1 to 5 pips. and a bomb, you're going to lose minus 10 pips. Okay, so let's just do the math here really quickly. Let's say that you take 10 trades in 1 week. Now, I know that there are not 10 8 p.m. entries in 1 week, but as you learn gold, as you study gold, and I encourage you to do so and get familiar and comfortable with it, you're going to find that it's not hard to find 10 trades per week. We could call this a week or 2 weeks, whatever you want to do, but per 10 trades. Let's say we have 3 winners. And let's say, oh my God, I did it again. And let's say we didn't have any losers. All the rest were these bombs. We had 7 bombs. Can anybody tell me what you're going to net over the course of 3 winners and 7 bombs? We're going to lose 70 pip on the bombs, correct? Include spread and stop loss. Okay. Assuming that we were doing 0.1s, and we're talking about $1 per pip. Here we would have 3 winners would give us 120 to 129 pips. We lost 70 pips. We're going to net. You subtract, right? We're going to net basically $50 to $60 across 10 trades at a 30% win rate. You're going to earn $50 to $60 with this type of math. Is everyone on the same page? Everyone good on that? You missed something? What'd you miss, Charmaine? So every winner we get 40 to 40, assuming we took out at 10 exactly and 20 exactly, you're going to do 40 to 43 pips. The bombs, you're going to lose 10 pips per trade because you hit your stop loss. Now, like I said, mine's usually 7 or 8, but we'll just say 10 for the sake of this math. We'll go conservative, and we went conservative on this. So 3 winners is going to be 40 to 43 pips times 3, which is dollars, right? Because we're risking, and we're averaging out, and we're saying the actual value, full value pips. Yes, you might have counted 150. That's what you did. I see. Yeah. You did 150. Yeah. But that's the thing. That's because we're not actually getting 40 full value pips. 50 full value pips. Because we took some profit along the way, we're actually only getting 40 to 43 full value pips. We're only earning $40 to $43 on a 50 pip TP. Now, if you do an all or nothing approach and you move your stop loss to entry, once prices moved 10 to 15 pips or so, you go ahead and bring your stop loss down to your entry, but you don't ever take any profit until you hit 50 pips, then you would earn $80 on a $200 account over the course of 10 trades with a 3 out of 10 win rate. Now, if you go back and back test this and look at what price does, you'll see why 50 pip is a very realistic number to shoot for. Because you could take any trade you want and say, you know what, I want really good risk to reward, so I'm going to just use a 10 pip stop loss and a 50 pip TP. That gives me a 5-to-1 risk to reward. But if it's not realistic, all you're doing is setting yourself up for failure. All you're doing is setting yourself up to lose money. And that, I don't know about you, but that's not really what I want to do. I use the 50 pip TP because it is a reasonable and realistic and very attainable goal. When you think about it, when price breaks out, right, and you get a gold rush call like right here, his TP is 50 pip, right? At that point, we're already in the trade, 30 to 40 pip. And you guys, and a lot of, he does have a high, now he counts 2 wins per win because he trades 2 positions, and he only counts 1 loss per loss, even though he loses both positions. But we don't need to necessarily get into all that. But it is a pretty accurate, that breakout trade, the breakout strategy that he learned from Gold Mines is a pretty accurate strategy. And So if you think that we've already gotten 20 to 30, 40 pip by the time a breakout happens, and then it often goes another 50 pip from there, getting 50 pip on gold is not hard once you kind of figure out where to get into the trades. And that's why I gave you that timing. Please, please, please go back and look at this timing, back test this, because you will find a way to trade it profitably if you put the time in and put the energy in and focus. I talk about 4Ds, not just with trading. This is your life in general, anything that you do, but determination, dedication, discipline, and diligence. If you apply all four of those things to gold, you will find a way to trade it profitably. And I'm talking this type of profitability, because if I can have a 30% win rate, and I promise you I don't have a 30% win rate on gold, I have way better. My win rate is typically about 70 to 80% is about what I'm at. We'll call it 70% is about where I'm at. It's a little bit above that overall, but roughly 7 out of 10 I'm winning. And the few out of 10 that lose are often not bombs. The few out of 10 that lose are at least half, more than half, are actually this, which is actually profit, right? We actually profited. And not only that, but if you profited 5 pips and you were in for a 10 pip stop loss, or an 8 pip stop loss, or a 7 pip stop loss, you got 50% of what you risked. I mean, that's when you add those up. For example, if this was 3 winners and 7 losers, now you're talking about, more like $150 of gain on a $200 account on 10 trades with a 30% quote unquote win rate. This is why I do not care if I lose a trade. This is why the emotion is so easy to take out of it, whether I have thousands of dollars riding on the one trade, or whether I have $150 riding on the one trade, or whether I have $10 riding on the one trade. Because with these type of numbers, as long as my entries are dialed in, and as long as I'm entering at relevant points in time, getting 3 out of 10 is so easy, it's not even funny. I mean, you could just basically guess and get 3 out of 10. Now, the thing is, because of the tight stop loss, that's why I say the entry is key. You can't just like, oh, look, price is at 1242.99. I'm just going to get in for a sell here with a 10 pip stop loss. Like, then now you're setting yourself up to go like 1 out of 10. Now, of course, you could go 1 out of 10, and you would lose. But if you went like 2 out of 10, you would pretty much break even. So this is why consistency is key. And here's the other thing about what I do. So this is how I approach each trade. You guys get that? The idea of going for 50 pip when I personally choose to take out profit. And this is why I encourage you to demo, because you'll get the feel for it, and you'll get that confidence of being able to wait for 50 pip. I know a lot of people, you see like 12, 20, 25 pip, and you're like, yes, and then it starts to come back, and you're like, oh, should I close now at 18 pip? Me personally, I just let it go, because I don't care, because if it ends up a loser, so what? I made 1 to 5, I made a couple percent gain on a lost trade, and I'll get in tomorrow and might be one of these. And if you're in, think about this, 10 trades, you had a $200 account. 10 trades, you only had 3 winners, and the other 7 all were complete, utter losses. And you still gained 25% growth. Does that not excite anybody? I mean, like, if you're not excited about that, just leave. Just leave the Zoom now, and like do whatever you want to do, because this excites me. 3 out of 10, 45% gain, that excites the hell out of me. Now, so yeah, so that's that, right? Sean, I saw your message. I don't know if you're still in here. I did see your message, but I didn't read the whole thing. All right. Why am I doing that? I'll just clear the whole thing. You guys good? You guys need to see this? Now, just for fun, okay, just for fun, let's just take a look at 7 winners. Let's take a look at, we'll go conservative, 1 loser. Oh my God. I'm over here talking while I write. I should just leave it like that though, so you guys can screenshot it and be like, this dude's an idiot. All right, 2 bombs.
You're not an idiot, man.
All right, 7 winners, 1 loser, 1 bomb. Now, what happens here? 7 times, we'll go on the conservative side. We'll just use the 40, right? So that's 280 pips or $280. 1 loser is you just got, we'll go on the conservative side. We'll say you got the minimum, you got one, it's $1. And 2 bombs, you go minus 10. I'm sorry, minus 20. Yeah, that's ugly. Undo. You go minus $20. Now this is in 10 trades. We'll just forget that. Your net 260 pips across 10 trades, which is at 0.1. $260 on a $200 account. You just flipped your account and then some on 10 trades with a 70% win rate. This is under leveraging, overperforming is what I call it. I know a lot of people who can flip an account in a week over leveraging. Problem is when they go the next week and they do it again, half the time that one loss knocks you back down to where you were before or even worse. And that's not what I'm trying to be about. Do I care if I lose 5%? When like I'll be totally honest with you guys here. On my side accounts that I trade 5% risk on, I average almost 1.5 flips a week. No lie, no joke. Anyone who knows me, who's been watching me do this for a while, I mean, some of these guys on the call, Nesta, some of these guys trade live with me. They know where my accounts are at. And I'm doing that at 5% risk per trade. I'm not doing that at 20% risk per trade, getting lucky and winning 10 in a row and flipping my account a few times. Like this is steady. And I take about 10 trades per week typically. That's steady. Nesta is my boy. He trades at my house. He comes over to my house and we trade. Oh, the $1,000. Dude, did you actually see what the challenge was? The trade with only the MAs, no price. Sean will probably tear that up, man. I'll probably eat us all alive on that. Trade, yeah. So as a joke, I want to do a $1,000 challenge where you're not allowed to use price. You have to turn all price, and you can't be cheeky and do like a one moving average to see the line chart. Minimum you can do is, I think we said, was like 34. I will repeat the strategy. Sorry, I see your question. I will repeat, but this is already kind of getting long, so I might want to do more strategy talk on another Zoom. And I promise I'm going to be doing Zooms regularly. Now that I got the internet set up, I'm good to go. I was in a hotel for a week. Before that was just having, had to move out suddenly because the guy that we leased from was a dirtbag and he was not the actual owner like he said he was. And the actual owner was moving back into town and that dude hadn't paid rent. And anyway, so I had a lot going on for the past couple of weeks. We got a nice place now. We're set up. I got my office, got the internet. We're good to go. So I'm going to be doing boot camps. I'll do like just straight videos, not Zoom. So I just go through one step at a time. And then I'll also be doing regular Zooms like several times a week. So, and if anyone on the Zoom, if you have any questions, like I'm available. Like just come and hit me up in a PM. You can ask any of these guys. Chris, he and I talk on PM. Ask any of these guys who are here, who have who started a relationship with me. Just hitting me up on Telegram. Like if there's something I can do to help you become a bit more profitable trader, like I will do my best to do that. And I'll never ask you guys for money. I'll never try to market you anything. I'll never try to sell you anything. Like it's not what I'm here for. I earn my money on Forex. I don't care about any of that other stuff. I have other streams of income as well. Charging you guys to give you some information does not matter to me. Not to say that people who charge for their time or do anything wrong. That's just you're not gonna find me doing that. So feel free to hit me up. Feel free to PM me. If if I can't answer you right there, maybe I'll do another Zoom. Hey, to each their own. To each their own. Me personally, any thoughts I got, you guys are welcome to. Um, I don't. Yeah. Now let me just go backtrack real quick because I'm not actually done yet. Um, I do want to get in a couple more things on the account management side. Appreciate your messages, guys. Appreciate that. Now where was I going? Oh man, I lost it. Damn, I lost it. So we were talking about the growth. Oh, okay, yeah. So here is how I approach that. So as we saw, 10 trades, even if you are at 50% win rate, you're actually, even if the other five are all or none of them are losers, with just one loser, I think it becomes basically like you flip in 10 trades. But and again, these are not income claims. I'm not like promising you that you're going to just flip your account all the time, but I'm saying if you take the time and genuinely study this and learn it, um, excuse me, there's no reason why you cannot get into low risk, high potential profit, high probability trades on gold day in and day out without a signal service, without just trading simple breakout strats, which are, very accurate, but you just get way worse ROI, which means you have to over leverage if you want to grow faster, or you just have to, be slow and steady, which is fine too. Nothing wrong with slow and steady. When you have the ability to do this, there's nothing wrong with going faster either if you can. So here's my outlook on that 5%. I do not take 5% of my current equity. I start the week. I do not send signals, Tanya, for the most part. I sometimes on my channel will send like charts and say this is the price point that I'm looking at, or like I did today, where I was showing you, that I would like what I was expecting, the 7 o'clock candle. So you guys can see my chart. You can see the sort of time. I told you I would prefer to get into a trade 50 pip. Once it's moved 50 pip, if I'm going to go against this action, I would prefer to get into a sell, more like up in this area up here, playing off this line, maybe a wick playing off this line, or a wick touching here. That's the kind of area I would prefer to get involved in. So I will sometimes, I'll put out charts, I'll put out trades, or I'll tell you, like, typically if I get into a trade, I'll often put that out on one of the channels or another, either on my channel or if I'm in Ozark chat or wherever. I might go in there and say like, oh, I just got into a trade. Here's my stop loss. Here's where I entered. And then what I love is recently, like in Ozark chat, when I put that out, other people come out of the woodwork and they're like, oh, I got in here, I got in there, I got in here. I'm like, dude, you guys are awesome because you guys are taking this, learning it, finding your ways to be profitable at it. I love it. Yesterday we had like 5 or 6 people in the chat who were all in a cell, and everyone got in on their own. It wasn't like I said anything. I happened to be in the trade as well, but everyone was talking about it, and we were all in at slightly different points. But we all did basically the same thing. So let me just go back to my whiteboard again, and this is I'm gonna wrap it up on this. So I take whatever my starting account balance is. If it's $1,000, I'm going to take 5% of that, which is $50. And on a 10 pip stop loss, that means that I can go for $5 per pip. I will trade 50s, losing with another yen pair today. Yeah. Somebody asked me earlier, like, what other pairs do I like other than gold? Personally, I like things like EA. EN. I like things that pay swap one direction or the other. UJ does as well if you buy, but at this current price point, I'm longer term, I'm less interested in the buys. Do I stack my trades? I'll sometimes, now if I do stack trades, I keep that 5%. Last night was kind of the exception. Thank you for posting the link. I will sometimes, like last night, I added 2% at a 3 pip stop loss. yesterday in the evening on 6 o'clock when that candle came back up and pushed back out the zone, or back out to the previous highs of the day. But if I'm going to twin trade, I do 2.5% on two different positions. Most of the time, though, I just do one position at a time. And so I take that 5%, which is a 50, and I will trade this 50 all week long. Okay. So if the first trade, if I win the first trade, I'm now going to have more like $1,200 in my account, right? However, I'm still going to trade on a 50. And typically I will wait until I've at least doubled the account. Usually I just go week, like on Monday, whatever, or Sunday, whatever I'm trading on Sunday, I trade for the week. But every now and then, like if I have a killer, I mean, yesterday, dude, that was dumb. Like 7% risk, 60% gain. If I had a week like that where like I had 3 or 4 of those types of trades and happened to flip twice or something like that, then maybe I would adjust this midweek. But for the most part, I will trade on this all week long. Then the next week starts, and if during the next week I have, whatever, it's not usually going to be that. But if it were, we'll say that it was this, then I would take and do 5% of this, which would be 65. So I would do instead of a 50, I would do a 65. And I would do that for the whole week. And then the next week on Sunday, I would reassess. I do trade Sundays. I trade Thursday nights. Now, also, I'm gonna go back to the chart. You guys all see what I do with the risk for the week. All right, now, no, that's Telegram. There we go. Okay, let me move these over to my other monitor. So, what we can see here, for anyone who has not been paying attention, we're pushing back to the outside of a zone. So, personally, I'm looking. I mean, this might be a sell kind of in this area. We'll see what the 8 o'clock candle, how far out of the zone it pushes. If it pushes and bounces off this line, I mean, I kind of have to just go with the pattern. I will probably go ahead and enter the trade for 5%. Again, you see the risk to reward. Do I care if I lose 5% tonight? Honestly, not really, because I know that more times than not during the course of the week, I'm not going to lose. I mean, in the last 24 hours, I've made over 120 pips, and that's full value pips. So yeah, I'm not super duper concerned. So I would probably go ahead and jump in it. I would rather see price go somewhere that makes me love the trade as opposed to just do it because that's what the pattern has always been, and I have to respect that. But I will respect that and get in if price doesn't push back out of here, and then the 8 o'clock candle pushes up and like hits this and turns around, I would be in like right there. And my stop loss would be like right here. No, like right here. That's just me. I encourage you to demo this though. And please don't over leverage. Please don't over leverage. You saw the math. You don't need to over leverage with this strategy. Under leverage, you could risk 1%. And you're going for like 4 to 5% gains. Please don't over leverage. There's no need for over leveraging. And I've said this before, and I will say it again. Anyone who consistently over leverages, I challenge you. If you are a professional trader and you over leverage consistently to a decent degree, talking like 20%, 30% risk per trade, show me your history where you've taken a 3 to 4 figure account and turned that into 6 figures and maintained in the 6 figure and continued that growth. I would love to see it. And no one, I've yet to be shown that from anyone ever. Not that I've been doing this type of Forex for very long, but I would love to see it personally. See a lot of big talk here and there, but yeah, when you talk about real talk about money and about account management and stuff, a lot of times the room gets a little bit more quiet. All right. So looking for, yes, please don't over leverage. Please, please, please. No need with these type of trades, no need at all. Yeah. And please demo this. Back test it. There's this replay button right here. You can go back. You can go back to some random time and you try not to look at what price. Just focus your eyes down here. Go back. You see that's the 8 o'clock. Like hit the replay button. Come down here. Don't pay attention to what price was. Go back to like 3 o'clock in the afternoon and replay it and watch for yourself what happens. You could replay it on the 15-minute chart if you wanted to. Just pay attention to the candles. And this is today's oh no, don't tell me it didn't mess up my replay because I switched. Man, no wonder. I was like, man, those match up. I hate when I do that. So if you're gonna do it on the 15-minute chart, find your time on the 15-minute chart and hit replay on the 15-minute chart. Otherwise that'll happen. So yeah, you want to go back to yesterday's, find price, look at where price was at 3 o'clock, see what's going on, and then watch it play out. See what it's doing, how it's acting, set your zones, go ahead and watch it. But demo it until you're comfortable with what's going on. But definitely be watching gold at these times of days. Now there are other times. 11 o'clock. That like midday is another time when we often see price flip around. Now sometimes it just keeps pushing through, but a lot of times if it's been coming down, it turns around and then works this way, the other way. Right here, I think I showed you this earlier, 10 o'clock, and then we go down. Anyway, so as you start to get comfortable with these moves and these like moves across channels and these 50 pip type of moves, you'll start finding some other times of the day where you might see price action that you're like, all right, I like the way that looks. I'm in for the buy, or that we went down 50 pip from that 8 o'clock entry, and then we shot back up, and here it's coming up to 7 o'clock, and we got news coming out. As soon as you see it start going down, you might want to jump in for the sell. You'll find your own, eye on that stuff. But this 10 o'clock, 11, boom, we go down, continue down later in the evening as well. You see that 7 o'clock time, that's another turnaround point. It's fairly consistent. We were coming up, and then of course, we were choppy, and then we went back down. Not that far, but later in the day. Again, this was that nighttime 8 o'clock candle right here. Look at that sell. That's the other thing about the math, the risk to reward. When you catch these type of moves and you don't stop at 50 pip necessarily, and you catch 100 pip instead, if you catch 100 pip at 80% value or 70 pip or 80 pip, I mean, you're talking pretty nice money at that point. That makes up for even more losses. One win makes up for 4 losses. So if you're catching more pips on a win, then you're making up for even more losses. Here you see this morning, 11 o'clock, we had come up, and then as we approach midday, moved quite a bit in the downward direction. So anyway, that's another time that's can be worth taking a look at. Down 11 o'clock, we did come down there, but eventually then we worked our way back up. 11 o'clock, we bottomed out, back up. Anyway, take a look, guys. Learn it, study it. I will make more content if you have any questions. Like I said, I'm a PM away, so please hit me up. And I typically, yes, Terrence, I generally do about 10 trades a week. I back test. So I was doing this in March. I was back testing basically from the beginning of the year. I back tested some last year as well, but as soon as I can get it. I mean, it'll take a little while to, we had a pretty decent length here, so it is going to take a little while to render. but as soon as it has rendered, I will post it. So me personally, right here, what we're looking at, we're seeing price in the middle of this zone. I want to see. Yes, yeah, I'll do that, Nesta. And that's another thing. Yeah, like if you guys have information that you want, like I think this video would be beneficial to people. I think this video would be beneficial to people. Hit me up in the PM and let me know that stuff as well. You don't have to just ask me a question. You could just say like, "Hey, I think this would be a good topic to discuss," and then I can kind of try to do some of the zooms around that and kind of like compile some similar topics or whatever, and maybe do a zoom on that one particular day. Yeah, I will do the pitchforks. I will do the pitchforks. Yeah, yeah. Because people sometimes ask me about my forks. They're like, "Dude, your fork is not like your line's not on a your line's not on a swing high or swing low. Like, what is this? What is this channel line? Like, where the hell is this? Like, how do you, you know?" But yeah. Oh yeah, the candles go way back. You can keep on going. I went back to the beginning of the year, kind of into the end of last year, and I was like, okay, so this has kind of gone through multiple seasons. This is sort of, gone through multiple months. At that point, I was kind of sold on the concept, and then I started trading it, and like, I'm not gonna lie, my account from April skyrocketed when I started doing this type of trading. It's stupid how much it grew from April till now versus from February to April. And it's not just because compounding, yes, that is an exponential curve and all that stuff, but it's not that. It's the risk to reward. It's the math that I just showed you guys today that changed my life right there. All right, Nesta. All right, man. Okay, so yeah, with that, I will call this closed. We might be looking at a buy today. We've seen price push down to the bottom side here as we start to close out the 7 o'clock candle. So my general thought is if the 7 o'clock candle is red, is bearish, I'm typically looking for a buy. Typically, and here, this price action I like better than if we were like at this area trying to look for a sell. Why? Because we've moved a nice amount from the previous swing high. So could we buy in Asia and into London? I don't see why that would necessarily. I don't see why that would necessarily here. There we go. Why that would be, why that wouldn't be able to happen. So we'll see where the 7 o'clock candle closes and what the 8 o'clock candle does. If it pushes out here and then comes back in and wicks, I would either take the trade there or I would be looking for a 9 p.m. Candle retest down there as well. That's kind of what I'm looking at now since we're seeing a bearish 7 o'clock. And if the 8 o'clock just keeps pushing down, then I'll just be waiting. And this is where really like what I've been trying to do recently is like this type of entry, get in like on this wick and then ride the movement. But yeah, that's something I need to back test more and kind of practice more. If anyone gets that strategy down, let me know. Feel free to take any information I give and do whatever you want with it. Make it your own. Make your own strategy out of it. Teach other people whatever you want to do. Whatever you want to do it. Just make gains and be smart with your money. I'm going to do webinars on like account management and stuff, going into more detail on that stuff as well. But all right. Yeah, be safe, Nesta. Cool. All right, man. Thank you guys all for showing up. I appreciate you guys. And if you're not already on my Edutainers channel, hop on there. Eddie sent the link out. Market recap, Ozark. Yeah, PM me, all that fun stuff. Love you guys. Appreciate it. I'm out. I will see you guys later, and I will post a recording in recap. I'll post a recording on Ozark, and I'll post it on my channel as soon as it's done rendering. All right, guys. Oh, wrong button. Thank you. Appreciate y'all.